This is Don Durrett. I'm at the Metals Investors Forum in Toronto, February 28th. I'm interviewing Shaun Heinrichs, the CEO of 1911 Gold, a company that I've been excited about for before he became the CEO. He was actually at Beaver Creek in September. I had him as the #1 pick, I believe. I think I had Talisker #2. They were my top 2 picks. And the reason why is because their project in Manitoba, I always thought it was basically a slam dunk. All they needed was higher gold prices, and that would allow them to put the project back into production. And now they're advancing it. So tell us what you plan to do this year. I guess that would be a good one, and then possibly the second year as well. What your plans are.
Sounds good, Don. And first, just want to say thank you for bringing me. I was really happy to join your panel group of companies. I know, as you said, you've been actually a long-time supporter of the company, going back to my CFO days even. And I remember looking at early models that you sent me. So it's good that we're here. The mine site, I just came from there. I was there on Thursday. We had a couple of ministers from the province actually coming out to site. I would say, Manitoba is extremely excited about the project. Happy to see it progressing so quickly. We've now got probably well over 150 people on site. 50 of those would be direct employees of 1911, filling mostly senior roles, engineers, geologists, mine engineers, mine superintendent, mine staff, mill staff, and then they're supported by a fairly extensive network of mine contractors, drillers. Obviously, we've got 4 drills going right now, 2 underground, 2 on surface. And then we have a number of maintenance contractors on site working with us on refurbishing parts of the mill, getting things ready, optimizing areas in the mill so they work even better than they used to. And then we're about to commence construction on the crushing circuit on the mill. That was the one big add that we felt we needed to do. There was a historic crushing circuit there that was never working very well, lots of downtime. We're putting in a brand new optimized crushing circuit that will allow us to feed ore, not directly, but fairly close to being directly from the underground. The ore is going to come through the head frame onto a conveyor and straight into the crushing circuit. But on top of that, we'll be able to feed satellite ores in there as well. So it's going to be a standalone unit in close proximity to the mill, and it's going to work even better than what we had before. And it'll be scalable. So we're going to start around 1,350 tons a day on that crushing circuit, but we can scale it up to 1,600 before doing any major CapEx changes. And that can be increased, obviously, well over 2,000 tons a day in the future by fine ore bins. Other than that, activities underground are commencing very quickly. We're developing into a number of areas, mainly off of level 16. We've completed a significant amount of dewatering in one of the ramp mines as well, so we'll be able to start refurbishing and rehabilitating that area. We see that as an area for at least 3 of our bulk sample test mining targets, which we've been talking about. And then the lower levels of the True North mine as well are almost accessible. We should be in there by the end of the month. We had a pump failure, which put us off about 3 weeks, but the new pump's there and it's been working. And so we should be able to get back in there, and a bit of a setback, but doesn't set us back too far. So things are moving along really well. And the exploration program has obviously kicked up significantly. A big focus on infill and delineation drilling, but we do have those 2 surface drills going, which are extending our 3 new discoveries down dip. So it's going to be a lot of progress made in 2026 on the resource in anticipation of that restart.
The one thing I get excited about investing in companies like yours, I'm all about free cash flow, chasing free cash flow. So your PEA, you're going to produce 50 to 60,000 ounces a year. Mm-hmm. Currently, the margins at the current gold prices, your margin would be around $2,000 or above. That's $100 million in free cash flow right out the gate. It was I kind of laughed when you put out your PEA and you said your payback was 2 years. It's actually 6 months.
It's true.
But they wouldn't let you say, current spot price. So your PEA was done at a much lower price, which is kind of ridiculous, because you're going to be in production so soon. So for me as an investor, for me, I just see when you start, 50 to 60,000 ounces a year, for me, that's just a starting point. And so you're going to have all this cash, right? Rolling the dough, if you will. And so you're going to be able to, with all that cash, you're going to be able to drill more aggressively. You're going to drill as aggressive as you want to, and you have that second deposit is sitting over there, like about 400,000 ounces, that's not part of your PEA.
Right.
And so with all this money, how long is it going to take you to basically do you have to permit that second deposit to get that into the mill?
Yeah, we do. Simple answer there. It is on ground that's not part of the existing mine lease area. There are 2 satellite mines which are in the PEA, which are about 3 to 5 kilometers to the east of the mine. Those don't need to be permitted, which is why they're in the PEA, but Ogama, which is what you're talking about there, is outside and it's in the southeastern part of the map. It is in an area for resource development though, and I expect the permitting process there to be fairly quick in Manitoba. We have some precedents. Up north with the Reed mine was permitted in less than 3 years and in production basically in 3 years, I think was actually how it worked out. So permitting was very quick. And because we have a full contingent of environmental staff and geology people, we do take baseline sampling as we go. So we have a pretty good record in anticipation of that environmental approval process that's expected. We will be looking to develop that project fairly quickly. And as you said, at $5,000 gold, or we put some sensitivity around $4,500 gold, there's a significant amount of cash flow generated from what is essentially a baseline PEA. It's, as we talked about back in Beaver Creek, there's significant potential for a lot more upside on that, which would result in even more significant cash flow. If you're at 5,000 and you're producing $150 million of free cash flow from the operation, just simple math on the all-in cost, that supports a fairly significant drill program out in the southeastern part of the project. And there are other areas on the property as well. I mean, it is over 62,000 hectares. So we see other areas that could be progressed and developed, but they're further out in the time frame. But the southeastern part has at least 3, potentially 4 significant areas for development over the next 5 years, and would provide a significant, source of satellite feed to the mine. And we think, using things like ore sorting and that down in that project area makes the most sense. Minimize the amount of ore coming up to the mine, supplementing what's coming out of the underground that we've got with the high-grade feed from those areas. But I think we can permit and construct those areas in a relatively short time frame. And a lot of that is on the back of our strong relationship with the community and the government that we've got.
So as an investor, I always say that the best investment is a producer that's growing production. And you're actually going to be in that bucket soon. You're going to get into a couple of really rare buckets. First of all, you're going to be a producer in Canada. Gold producers in Canada that only produce in Canada, there's not that many. You're in a small club. And then second to that, you're actually going to be a producer with production growth. Those are also rare because a lot of times companies, they'll advance a project and there really isn't a lot of growth there. It's like, okay, they're trying to find growth, right? They're drilling it. But yours, you have these satellite projects, satellites that are just kind of low-hanging fruit, if you will. They're ready. So for me, I'm looking for, there's like 3 stages to your company, if you will, to basically value it kind of the low-hanging fruit. It's like the first one, you get into production, and then you have that first initial growth spurt. So somewhere between like at about 20,000, 25,000 ounces. And then you do it again, and you get to 90, 100,000 ounces. Yeah. So what's the time frame for those 2 stages?
Well, I think we're pretty aligned in the phases. We see it as, kind of our core part, which is in the PEA. And even within the PEA, it's only a subset of that core part that falls in there. Obviously, we'll look to capture all the 1 million+ ounces that's in the resource with drilling and time. But then there's the step out into the new discoveries, which should happen over a relatively short time frame, particularly Sam Southeast, which has already been mined about 1.1 kilometers below surface. So we know it's been mined. We've extended it up to surface. We've got over 1 kilometer of strike, which is within reach of the mine. So I see that happening and coming into the mine plan in 1 to 2 years at most. Nice. Right into the mine plan, and that's a lateral development as opposed to a vertical development. So we're bringing in ore higher up in the mine, which is something we talked about in the what that does to our production levels because we're shorter distance to the mill. And then stepping out to San Antonio West, which is a new area and wide open for potential extension, is a little bit more in that 2 to 3, maybe at most, I would say, in terms of development, just because there's less on that side of the mine. So we need to do more drilling, but we will be able to access that relatively quickly. And then Shore target, again, that's actually probably in the same time frame. If Shore continues to prove out, and we're drilling that from surface right now, and we have drilled it underground as well from our underground drills, that's going to follow closely after Sam Southeast, because that's a logical extension from Sam Southeast. And that's before we start talking about, the down dip extension of like the 007 mine, the Hinge mine, the Cohiba mine, and what we can do there and what that does for our production, and connecting those to the underground network, which comes up the shaft ultimately,
Right.
and that increases production. And then the third piece, there's actually a fourth piece, which is just like the blue sky, optionality we have on that large package. But the third piece is that brownfields project area in the southeast, and what that does
Right.
in terms of production, and everything down there is potentially
So-
same scale.
So now you can see why I've liked your company for so long. It has the low-hanging fruits like all over the place. All it needs is high gold prices, which we have.
Yeah.
So, all right, Shaun, thanks for the conversation. It was great.